did you ever try to trade price action? Comment below in the comment section. I want to hear your thoughts. I'm sure 90% of you guys have been trying before. I've tried before myself. I trade a variation of price action these days for sure. Price action and something else. But it's something that can make you a lot of money if you do it the right way. And by the right way, it means the right process, the right step, and the right consistency in applying price action. Now, this all starts with levels. You want to be able to identify the levels and then trade at these levels the right way. And if you don't know how yet, or if you're not been able to make it work so far, that's what we'll cover in this video. What's up, traders? Welcome back to Bangkok in Thailand. In another video, I'm doing partnering with Pepperstone. I've been working with them for a few videos now. I'll put the series below that you can watch the whole series. If you want to watch all these videos I've been doing with them so far, they are, I believe, awesome. And they allow me to kind of provide you with more info, more support, and give you more tools to be able to succeed this year in trading. So for this video, we covered price action, and that's something that we can go a lot in depth on. So if you want to see more videos on that in the future, make sure you comment below and let me know in the comment section, and give a like as well to that video. I would appreciate quite a lot. And that tells me that you want to see more videos like this on price action, which I will understand for sure, but you let me know, of course. Today we'll be looking at different things about price action, kind of like a process that you can follow, things you can look at, to be able to do it the right way, because it's something you can do like really wrong or extremely well, and in between, of course. So we want to get you further to the extremely well part, so you can kind of get more result with that. And that would mean a lot for me and for you as well, because I really want you to be able to succeed this year. I'll be joined by Thomas, who's working at FX Evo, which I had in a previous video on the channel, talking about finding your edge in the market. And we'll be kind of having a look at how to look at key levels, what is a sign of breakout, what's a sign of reversal, rejections, and how to deal with those cases, what to do in order to be able to trade in those circumstances. As well as at the end, we'll bring Weston, investment manager at Pepperstone, to share his top 3 price action trading tips, which are very, very useful. And I'll be sharing some of my own stuff at the end as well. So to begin with, here's a bit of background about Thomas, in case you've not seen him on the channel before.
Thanks very much for having me on the show, Edian, first of all. So what I do here at Pepperstone is I run, with my co-host Tyra Nabella from FX Evolution, I run the webinar series. So we basically do a webinar on technical analysis every fortnight for Pepperstone. We've been doing that for many, many years now. And we go through kind of some live market analysis as well as some of the technical theory that we like to use. And it's really based around price action. So a lot of our trading is price action, support resistance based, and that's what we do every fortnight for Pepperstone.
One of the first components in getting to trade price action right are key levels and identifying them. It's also what most traders get wrong.
Yeah, so there's a few different ways to identify good levels in terms of price action. One of the first ways is, of course, understanding support resistance and how that works. You also want to understand the theories behind role reversal, which is very, very important, and patterns. So in specific, one of the patterns that I always recommend people understand as a basis is things like channel patterns or range-bound market patterns. When you understand those, then it really helps you to be able to identify great support resistance levels, and then to be able to use that knowledge to identify breakouts and get involved in price action trading. So support resistance, one of the most important things when it comes to trading, and one of the things we base all of our trades on. Round numbers are very, very important, depending on the market that you trade. Obviously in the stock world, round numbers are incredibly important, being double zeros and those kind of things. In the currency world, if you're trading the Aussie, say US dollar, and you're trading around the 70-cent mark, it's going to be very important. And if you notice a support level or resistance level around those double zeros, then that's something that you want to pay attention to, and it actually does strengthen your support or resistance level. So round numbers very, very important in all trading based stuff.
Once we've covered that, we get to the next step. And to simplify things, we'll say that price can either break a level or reject a level. So either price is going to fall down after hitting a level, a resistance, or it's going to break through, just to keep it simple.
Yeah, it's a really good question. So I've actually got an example that I'll show you today on this. And here you can see a range-bound market, or a channel, as we like to call it. And what you'll notice is that at the upside, or the kind of resistance side, just before it hits the resistance level that we've got highlighted here, there's a little bit of congestion. It kind of looks like a flag or a bit of a pause in the market before it usually looks to break. Now, this is really important to understand. This happens time and time again in terms of trading, and you often do see this just before a breakout is to occur. So it's kind of like the market's thinking about a level, it's thinking about breaking that level, and often there's a bit of news or an event that's about to occur before that break does occur. So that's the type of thing I look for. But the most important thing when looking for breakouts or looking for new trends is that you wait for confirmation. And that is the key to price action trading. Always wait for confirmation, and that will help you to be more successful. With reversals in the market, there's a couple of different ways. Again, I'll go back to what I mentioned before in terms of support resistance, role reversal, and pattern analysis. So key reversal areas, you'll often see things like double tops and double bottoms, which in themselves basically tell you that the market is coming to an end in terms of the trend and starting a new trend. And I've got an example here for everybody today just in terms of what a double top looks like. So I'll put that up on the screen and make sure everyone can see that. You can see the resistance level, the intervening trough, and of course where we would expect the take profit zone to be. So understanding double tops and double bottoms is really, really important, but also to think about the price action in terms of what the market's telling you. So many people will look at candles and they'll look for things like shooting stars and hammer reversals or engulfing candles, especially on the bigger time frames. So if you're looking at, let's say, a 4-hour or 1-hour based trade, always check the daily and weekly charts, check the support resistance, and if there is, let's say, a shooting star or an engulfing candle on those bigger time frames, that means a lot to, and it's very significant in terms of potentially getting a reversal trade. I think with price action, it's about putting in the chart time. So it's something where you need to understand and put in as much chart time as possible. I usually like to recommend that people focus on just a few pairs to start with and understand the way that they move in the different markets. If you're trading, let's say, the London session, understanding how the euro, the pound, US dollar kind of work is very, very important around those opens and closes of the sessions. And I would say that understanding things like channel patterns will really help you, especially horizontal channel patterns, will help you to improve your price action. So if you're a new trader getting into trading and want to trade, let's say, breakout patterns or things that may give you a higher chance, understanding channel patterns, very significant. And that's something I guess that I'd give everybody as a top tip to start with.
Right there, that's something you can apply in the market and get some results. But to go a little bit more straightforward, I asked Weston, the investment manager at Pepperstone, what would be his top 3 tips for trading price action?
Well, the first thing I say to people, whether you're starting out or whether you've actually been in the game for a long time, is actually understand what are you seeing. And for price action, I tend to look at candles like most people, but obviously you can look at other aspects and other ways of portraying that. But for me, for candlesticks is the way that I've always gone, and that's how I've tried to hone and get my edge. But so I ask myself, what am I actually seeing? Whether you're looking at 1-minute candles, daily charts, 4-hour charts, when you're looking at that price action that goes through, understand exactly what you're seeing. Now, for me, I've talked about it in other videos, is the aggregation of flow, the supply and demand that goes into that candle. Whether you're looking at reported dealers, institutional asset managers, retail traders, whether you're looking at leverage hedge funds, all of that information is contained in the price action. So when you actually see things like a spinning top or a bullish key day reversal or whatever it's going to be, ask yourself, what have you seen and what does that represent? And of course, that goes into the second point, which for me is the most important one, is when you actually see one of these reversal patterns play out, whatever that's going to be, is wait for the confirmation in the next candle, in the next period. When you've seen a change of ownership or structure playing through, is wait for the confirmation on the next situation, on the next candle, and that gives you that higher probability. So that's probably the 2 main things that I like for, is actually understand what you're seeing. You're seeing that change of structure, that movement in supply and demand, and what that actually represents in the candle, and get a firm understanding of the capital flows which are going into that view. Then when that potential reversal pattern plays through, is actually wait for the confirmation to come through in the next candle there as well. So really, they're the couple of things the first things that I would obviously look out for. But I think ultimately, you're looking at how that works out in probability, and that's probably the third point. Is understand that nothing is certain in this game of trading, and what you're looking for in the price action is something that can give you a higher expectancy that can trend, or that move can reverse and play out as well. So understand the probabilities of how that works in trading there.
For my part, I've been kind of thinking about different price action skills I've learned over time, and things that really made a big difference for me. A lot of them that people talk about online are obvious. And I want to kind of cover the non-obvious things that help me a lot and that you don't see anywhere online. So what I come across are 3 things that I believe now to be really helpful when I trade. And these are kind of like rules I go by that you could use as well if you want. You don't have to copy me. But if you think that they're going to be useful for you, then use them for sure. And that will be beneficial for you, of course. So first things first is I like to look at the market context first, no matter what. So whenever I pull up a chart, like charts I have behind me, they're going to be looking at the market context first. I'll show you quickly here. Okay, but you see that they're marked with zones, and that's market context on this chart over here. So I'll try to see like what the market's doing on that chart, what's happening on the chart, what zones they are in the market, what are the markets sideways, trending, and how long it's been doing so, and what are we going to see a change in the market soon based on technicals. And that's always my first step. I found that like if I just go on the chart with setup, that's never a good thing, and that's never what I do now these days. I always go with the context first, and the context brings me to think about what can I trade next. My second kind of saying with price action is choppiness is not what you're looking for. So very often we see a chart where we might be at a zone, and that's really cool, but it's really choppy, like price going up and down in a small tight range. And some people might want to trade that, might want to enter early to be able to catch a move before it happens. And that's all good, but I've never had success with that. So whenever the market is choppy for me, I just stay away and I wait for a clearer sign. And sometimes I'll miss a trade because of that. But I believe that waiting for a proper environment in the market is a key to be able to not take too many trades. Because what if you take too many trades there and they don't move, and then you're stuck in trades for like a week and you have many trades open that you cannot do anything with? Then that's a waste of trade and capital. So why not use this capital or something else on different trades that are more reliable and in a proper environment? So choppiness for me has been bad. It's like how I get stopped out the most times. But the more I eliminate this, the more I kind of stay away from choppiness, tight ranges, and even just regular ranges, I have better result. The last thing that I've been kind of learning to do over the past few years is how to combine multiple time frame properly. I'll put a video on that if you want to check it out after. But basically, it's one thing to trade one time frame. It's fine. You trade one time frame. It's good. Some people like that. But you have much more success when you go from a context to a setup, so multiple time frame, and that can mean 2 time frame. I never use more than 2, but I might trade on like different time frames. Like I have a 1 hour chart, 4 hour chart, 30-minute chart where I trade on, and the daily or weekly chart to look at the zone. So that's kind of my routine. And now the more I break these down, the more I follow the higher time frame, the better it gets. But I don't follow like, oh, I want to have an alignment, a trend here, 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 and here. I have like a zone I look for in a higher time frame on a weekly chart. And then lower on a 1 hour chart, I have a setup, and that's it. And doing this right really leads to bigger profit, because sometimes it feels scary on a lower time frame, like everything is not set up right. But because you have the higher time frame in mind and aligning with that, then it's better, and then your trades are also successful. So you can use that if you want. You don't have to, but I recommend if you want. And I'll put some videos for you guys to check out, of course, below on that topic. That would be really useful. And to finish up, here's kind of like a bonus. So Chris, when we spoke over the phone, told me about something he's doing that most people don't know about, but that's how to look at and analyze the market, and how to look at what price action does on a technical point, and how the big players are playing in the market and taking position in the market, which is quite interesting. So have a listen to that.
Yes, I think one of the things that I've been talking about recently is the idea of who's moving capital around, and they're very nuts and bolts of financial markets, and certainly in FX markets, is the idea of cross-border capital flows, and that, who's moving that money around. So if you go back to the recent Bank of International Settlements triennial FX report, which came out a couple of weeks ago, you get a really good context, and I think it really sort of plays into this. When you're looking at a chart, when you're looking at that price action, who is actually moving that money around? You've got 38% of the daily flow is getting taken by reported dealers. These are the sell side banks who are managing flow. They're managing their order book. They're trying to make a turn from liquidity. They're not necessarily speculating on markets, but they're managing flow. That's 38% of the price action that you're going to, or the variance in the price action that you're going to see on one day. You've got leverage funds or hedge funds, which are probably much more representative of who we are and what we're trying to do. They make up about 9% of the daily flow. You've got asset managers, pension funds, insurance funds, and they make up a larger percentage about it. But if you actually aggregate all of this pool of money that's moving from one country to another for whatever reason, a lot of that is detailed into the price action, and that's what you're trading. So when you see a candle and it's making a move, and that's what you're seeing. You're seeing all the bids and offers and all the buys and the buys and sells all aggregated into one area. So that's when I ask myself, when I look at this, when I look at a candle, I'm asking myself, who's moving this money around and why are they doing it? Ultimately, that resonates with a candle which tells a story. And that's what we're trading with price action. That's where we can get the probabilities, and it tells you a lot about the psychology. So when you see, for example, after a strong move up in price, a strong trend, and you can use your oscillators, your moving averages to detail that trend. When you get a pin bar reversal, for example, it tells me that potentially you're seeing a change of ownership and a change of structure from that market. Of course, then you wait for the next candle, which gives you the confirmation on that time zone, on that time frame, that gives you confirmation that change of ownership has happened. But ultimately, when you're seeing a candle and you're looking at what happens in that range and the open and high and low within that, is you're seeing an aggregation of all of these orders take place at any one time, and that tells a really powerful story.
Once again, guys, I appreciate you for being here. As always, comment below with your thoughts or your question below. I'll make sure that Thomas and Chris answer your question after, and that you have some support on that. If you have any question for me, make sure you leave your question as well. Here are a few comments for the past video. I appreciate you guys for leaving your comments. As always, it means a lot to me. And I look forward to help you out this year to achieve your goals. It means a lot to me to be able to contribute to your success, and I'll do my best to make sure you get there. Check out also the links below for Pepperstone if you want to be able to trade with them. They are a broker that I highly recommend because of their support, the customer service, and people working there are just awesome. So if you're looking for a broker, then use them. If you want to transition, you might want to use them as well. Link below for that, of course. And I'll be catching you guys in the next video. Ciao.